So welcome to the October meeting of the RR Society Third Sector Special Interest Group, which primarily Dr. Peter Tickner will be talking about fraud, what do operational researchers and analysts need to know. We're going to start with a very short introduction from me, and then we're going to start with a little talk from Paul Vandal, which is about charities and fraud, what's different. That's probably going to be about 10 minutes or so. And then our main talk will be Peter Tickner talking about fraud. And then we'll, as usual, we'll finish with some questions, which I'll chair that session. Hopefully, and the aim is to end by 1 o'clock. Okay, so over to Paul. So Paul, both speakers are fellows and chartered members of the Institute of Internal Auditors. Paul is the former head of the operational research in HM Treasury and the Cabinet Office. Since retirement, he has provided pro bono advisor to a number of charities. So over to Paul. If I
Good morning. I hope everyone can see my slide.
Yes.
Yep. My apologies, you can't see me. That's not necessarily a bad thing. I'm told I have an excellent face for radio. So a number of studies have suggested that charities are particularly susceptible to fraud, that more so than other organisations. That's why this week is Charity Fraud Awareness Week. Equally, my experience in many charities suggests they don't think about it very much. Maybe that's true for operational researchers as well. So a few thoughts of what might be the cause for all this fraud. It's based on a mixture of research and my experience in charities. So let's start off by thinking about the three main sectors of the economy. The private sector is there to make money, and fraud loses money. So there's always a focus on fraud. Public sector is there basically to satisfy the whims of elected representatives. And they have made it very, very clear over many, many years that fraud is an absolute no-no, and they will pay over the odds to avoid it. But the third sector is there focused entirely on providing public or private benefits. Fraud doesn't really come into the thinking very much as one of their key driving forces. And why is that? Right, first of all, charities are very trusting institutions. All the people are very nice. They all get along with each other. And in fact, if you make any suggestion that they might need to look out for fraud, you met with something like, but if we can't trust each other, ... Heard it many times before. The first time actually in a charity was when I had suggested that there might be some need to improve control to avoid cash disappearing in cash handling. No, we must trust each other. 3 weeks later, several £100 disappeared in the back pocket of a member of staff who was never seen again. Charities are also very accepting of their clients or beneficiaries. They tend to take them at face value, don't check on who they might be. Think about food banks, soup kitchens, people who make small grants to families and children. Most of their recipients will be honest, but some certainly will not. But that's in the culture of the organisation, so fraud doesn't really get thought about. And consequentialism is rife in charities I've worked with. The idea that rules don't really apply to us if we're doing good things. So if you study the literature, you'll find that charities are far more likely than any other organisation to offer grants. And certainly when I was in Africa, whenever I got a call from the British High Commission to say someone had been arrested for smuggling, they always worked with a charity and said, but we're doing charity works, the law doesn't apply. It is a problem in charities, and as any good con man will tell you, if people are prepared to bend the rules for good reasons, they make absolutely superb marks for fraud and blackmail. Some other issues we have with charities. Many of them have charismatic founders or CEOs. I can give you a few examples. I'm not saying any of them fraud actually existed, but certainly they were wide open. Think about Kidscapes, White Helmet, Bob Geldof and Band-Aid. All terribly focused and all absolutely wide open to fraud. Trustees and volunteers, similarly, are nice people who care about the cause and care about the beneficiaries. But trustees aren't appointed generally for fraud or financial awareness. Indeed, according to this week's survey, less than a quarter of charities have policies to address cybercrime, but most of them had online client details and a lot of them online fundraising. But the trustees had never thought about cybersecurity. And as a Charter Fellow of the Institute, I must mention internal audit. Most organisations in the private sector and all in the public sector have internal audit. And internal auditors tend to take an interest in fraud and where there is a fraud risk. Very few charities do. In fact, quite a lot of charities I've worked with didn't even know there was such a thing. So they're at higher risk just because they haven't got anyone watching the back of the chief executive and the board. And what is the risk to charities? Well, obviously, if you're defrauded, you might lose some money. But to my mind, there are much bigger risks. There's the reputation risk. Charities live on their reputation for being good, reliable people with whom you can do business, whom you can trust. That can disappear in a moment if there's a little bit of fraud around. And if I were giving money to a charity, I would have second thoughts if I knew that some of the money was slipping out the back door by way of fraud. And lastly, and not often thought about, but very important, is the regulatory risks. There are particular fraud reporting and accountability requirements placed on charities by the Charity Commission. Last week, there was a survey published showing very low levels of compliance. Now, the regulatory risk is real. If you have a fraud, reporting requirements take a lot of time and effort. The Charity Commission may then investigate, and at worst, that can turn into existential risk. So the regulatory risk is real, and it's even more worrying the amount of money you can lose. With those thoughts, I hand over to Malcolm.
Okay, thank you, Paul. So now we're going to have our main talk, which is from Dr. Peter Tickner, who has a master's degree in internal auditing and management from the City University Business School and a PhD in counter-fraud methodologies for the public sector from the Institute for Criminal Justice Studies at the University of Portsmouth. He's author of several books on fraud and experience providing fraud services in the public and third sectors. Aside as being a fellow and a chartered member of the Institute of Auditors, as is Paul, Peter is also a member of the Institute of Counter-Fraud Specialists. So, Peter, over to you.
Thank you. Thank you for that kind introduction, Malcolm. I'll try and launch the right screen. We'll see how we get on. Right, hopefully everybody can see that opening slide. thumbs up would be helpful. Is that visible?
Yes.
Yeah, thank you. Right. As I start, I'm just going to read from Saturday's Times. Ex-church officials £5 million charity fraud. A former church official faces a lengthy jail term after pleading guilty to defrauding a Church of England charity of 5.2 million. Gentleman in question was operations manager for a period of 11 years between 2009 and 2019, and he had a long-standing gambling addiction. Moved money into his own accounts, was in control in moving the money about for the church charity, and got away with a significant sum of money. So that's the kind of fraudster that I used to get involved in trying to trace and hunt down. But it just shows that, you know, very topical. I know that cyber fraud is the big thing at the moment, but this guy just defrauded from the inside large sums of money from a major church charity. Right, now hopefully this will move on. Right. Let's just define what we mean by fraud, first of all. It's an long-standing legal maxim that fraud is odious, that you can trace back to the Middle Ages. Nobody bringing an action before the courts, as Jeffrey Archer found out, of course, should profit from a fraudulent behaviour. But fraud has only been defined in the UK legislation since 2006, although common law offences have existed for centuries. But many of the common law offences are extremely fuzzy. Prior to 2006, most fraud offences were classed as offences under the Theft Acts. And this caused a real problem for proving whether fraud had been committed for any criminal investigation, particularly as technology moved on and the Theft Acts didn't. So now all Theft Act fraud offences have been abolished, except for the Section 17 offence of false accounting. And the only reason why that one's not been abolished, because it's a very simple offence. Somebody falsifying a record to steal money for their own benefit or some other person's benefit. And so that Section 17 false accounting still exists and people still get charged with it. Scotland is different. I must warn you here, Scotland is different on fraud, but not on other aspects. Scotland still relies almost exclusively on common law legislation. So the Fraud Act of 2006 doesn't apply to them. But it has three sections that are the things that most things are hang on. Fraud by false representation. So any deliberate false representation to people that results in fraud classifies. It's a very broadly written offence. Section 3, fraud by failing to disclose information. So you know that something, if that person would know it, they'd know you were defrauding them and you don't tell them. These are the parts of the Fraud Act that apply to organisations, particularly, you know, whether it's a voluntary sector or whatever. And Section 4 is fraud by abuse of position. Now, this one is quite interesting. The original intention of this was to cover the position where you're responsible, you're looking after an elderly relative, or you're looking after somebody who can't manage their own affairs, and you're the kind of trustee of that person. And you have control of their bank accounts. And this was meant to be the offence of you stealing their money. But in actual fact, fraud by abuse of position has started to be used to charge anybody in a position of authority in any organisation, whether it's the voluntary sector or whatever, if they've abused their position in order to commit the fraud. So this has become a much more widely used section than it was ever intended originally. And the fraud is committed when the individual's conduct is dishonest and they intend to commit the fraud, cause a loss to another. Now, the important thing there is that they don't actually have to have done the fraud to have committed the offence. If they've taken steps and it's clear that they intend to commit the fraud, but you've managed to stop them, they're still guilty of the criminal offence. Other criminal offences, there are two common law offences: conspiracy to defraud. The police love that one. It's so broad that they can charge almost any group with more than one person involved in a fraud with conspiracy to defraud. And cheating the revenue, which of course HMRC are very keen on. In Scotland, they have a whole plethora of common law offences, from uttering a forged document, one of my favourites, I must say, embezzlement, which is the same as the American offence of embezzlement, which is basically fraud, but fraud by an employee. And there's a plethora of statutory fraud offences for every individual Scottish Act, from the Licensing Act onwards. It's a whole mess in Scotland. The one thing I like about common law offences, though, and people may not realise this, is they don't carry a maximum sentence. The maximum sentence is life. So if you're charged for the common law offence, it has to be serious, or the CPS won't let you be charged with it. But it has no limit, whereas the fraud offences are limited to 10 years maximum. And some other offences like Computer Misuse Act are limited to 2 years or 5 years. But the fraud under common law offences is unlimited. We can lock you up and throw away the key. Bribery Act offences, remarkably, apply to the whole of the UK. Scotland has signed up to that, as most of the world does something very similar. So the Bribery Act replaced the old Prevention of Corruptions Acts and led to the abolition of the common law offence of bribery. So that's actually been abolished. And there are two key offences, well, three, but there's two that you're most likely to come across in the voluntary sector. And one is bribing another person, somebody offering a bribe to gain an advantage where there's wrongful intent, whether or not the bribe is paid. Note again, the bribe doesn't actually have to be paid, but the intention to pay the bribe commits the offence. And section 2 is the offence of soliciting a bribe. So asking for a bribe in order to perform or not perform a particular act for the charity of which you're responsible. And then section 6 is the one that the Americans wanted everybody to put in, and we have in our legislation, bribery of a foreign public official. This means that if you're based in the UK, but you go out to, I don't know, any country in the rest of the world, and you bribe a public official there, you can be charged in the UK with that offence. Whereas before, that would have been seen as an offence that related to that country's laws. So those are the three areas where people are likely to fall foul of the Bribery Act. Now, the Charity Commission has a number of expectations in terms of the risk of fraud. So they expect all serious incidents to be reported to them. Now, what is defined as a serious incident obviously depends on the size of the charity, what business it does. And if necessary, they're literally going to have to ask the Charity Commission, is this a serious incident? Should I be reporting it to you? And fraud and cybercrime, they require to be reported to action fraud via the online reporting tool and a crime reference obtained. But they want theft reported to the local police. I have absolutely no idea what persuaded the Charity Commission to come up with this dog's dinner. I can't answer that one. But I can tell you, you want to try reporting something to action fraud, best of luck. And put aside the rest of the day for making the call. It's almost impossible to get through to them. Why you would then report theft to the local police, I'm not quite sure. The only advantage charities have is you would be seen as vulnerable. So if a charity has an incident, the police are much more likely to listen to you than they would to a member of the public, or if it was a commercial organisation. They want charities to act quickly when fraud's suspected, and they want charities to have a fraud response plan. So that's something you can always ask about. Have we got a fraud response plan? The trustees should know if there is one. And the Charities Commission has actually sent out 8 guiding principles for what they expect charities to do. So the 8 guiding principles can be summarised as follows. Fraud happens. Charities are just as vulnerable as other organisations. Good point. Fraud threats constantly change. Charities need to be alert. Well, yes, this is all motherhood and apple pie. Prevention is far better than cure. I think we could all agree with that. Fraudsters exploit trust, so charities need a strong counter-fraud culture. And as Paul has mentioned, this is the area where charities are definitely weak. Discovering fraud is a good thing. The exclamation mark is mine. Is discovering fraud a good thing? It can bring the organisation down. It can lead to the removal of the trustees. It can lead to the Charity Commission taking over the charity. It can lead to all sorts of dire consequences, but it's a good thing. Every individual fraud should be reported. This one, again, I have a trouble with. You may need to do it for the purposes of insurance. You may need to do it to keep the Charity Commission happy. But frauds can be tiny, minuscule, and defining an individual fraud. For instance, supposing I provide some kind of service to a charity and say I'm a linguist and I help you translate documents, so I help you interview people who speak that particular language, and you pay me piece rate. Supposing I defraud you on every single claim I make to you, each one of those is a separate fraud offence. So each individual one would have to be reported separately. So I'm just mentioning some of the inconsistencies in what's being looked for here. Anti-fraud responses should be proportionate to the size of the charity. An excellent point, and I'm glad they've put that in. So if it's a very small charity, you can't have all the kinds of controls and bells and whistles that we're talking about for the larger charities. And everyone in the charity has a role to play in fighting fraud. And that's really what Fraud Awareness Week is aimed at, which of course started on Monday. They've been doing it for a few years now, and it's a good thing, Fraud Awareness Week. And in fact, last year I spent the same day with quite a well-known charity going through their fraud awareness and training their staff on it, precisely that. So let's talk about types of fraud and emerging trends. There are different ways of classifying fraud. I like to classify it according to business areas. I find that works quite well for me, but there are other ways of doing it. But if ever you're wondering about how to classify frauds, there's an organization called the Association of Certified Fraud Examiners. They're a worldwide organization nowadays. They started in America, a character called Joseph Wells, quite a character, by the way. They're quite ancient now, but he was an ex-FBI agent who specialized in financial crime. And when he left the FBI, he thought, well, we've got accountants and auditors over there looking at financial crime. We've got investigators and fraud specialists over here, but never the two meet. So he thought the police and accountants don't meet on this at all. So he came up with an organization to try and marry the two together. They do an annual survey, which is, you can log on to their website. It's an annual survey of what's going on in fraud in the world. But I'll tell you something remarkable. In the last 20 years, they have used their resources around the world to estimate the level of fraud in all organizations, voluntary and private and public sector. And remarkably, they always come up with the answer of 5%. I don't know how they do it, but it's always 5%. So I can tell you now what next year's fraud for survey will show, about 5% fraud in the rest of the world. But they divide fraud into three areas. They put corruption under fraud. Interestingly, Transparency International, which you'll be aware of, the organization that looks at the corruption index around the world, does it the other way around and sees fraud as part of corruption. Well, there you go. But corruption is basically the Bribery Act. Fraud is a Fraud Act. Asset misappropriation, stealing physical things, cash, computers, goods that belong to the organization. Financial statement fraud. This is what tends to happen at the top of the organization when the chief executive decides that the organization, like Valerie Patisserie, has got £19 million hold in its accounts, but only spends 110 million. Nowadays, almost all fraud involves a computer or technology of some kind. So unless the software itself is causing the fraud to occur, it isn't classed as cyber fraud. So, you know, almost any fraudster is using a computer to commit their fraud. But actually, not all cybercrime is fraud. And what I would say to you is that the two big risks that charities face at the moment, neither of them are actually fraud. One is ransomware attacks, which can generate from almost anywhere, any organization that has an online presence. You can't stop a ransomware attack, by the way. All you can do is have good backup systems to restore where you last were before the ransomware attack. You'll never block a ransomware attack once it attacks you. And the other one is denial of service attacks. Charities are less prone to this happening to them. Although if Oxfam offends or something and appears in the national press, I can imagine it might be the target of a denial of service attack. Or if a particular charity offends a particular group in a particular country, they may find themselves the subject of a denial of service attack. That's basically when your website is overloaded, your systems are overloaded, and you can't communicate with anybody. They can be stopped. And you know, if you've got good IT specialists, they can stop them. But ransomware attacks, I'm afraid, there's no way of stopping them. So this is just a quick fraud tree. It's in the slides, which is how certified fraud examiners classify different types of fraud. The useful thing about that is it gives you some idea of what kinds of frauds might actually happen. You can just look in with the labels that they give them, gives you an idea. There's one over there, they talk about skimming. They mean taking cash from income. It's what we call teaming and lading. Just a few thoughts about fraud. 80 to 90% of fraud that will affect any charity, despite that article I quoted at the beginning about the finance director walking off with 5 million. 80 to 90% of value reported fraud will be external fraud. So what do we mean by that? Procurement and contracting goods and services. So it'll be false invoices, it'll be false goods and services, it'll be things that didn't exist or things that have been inflated. grant and loan fraud, exaggerated or bogus applications to the charity for money, claims by service providers. I mentioned the potential of linguists, but agency nurses, doctors, whatever. If you provide a service to a charity and you're given a remuneration, there is an opportunity to defraud the charity. Abuse of public services, the blue badge scheme is a classic one there. You can get bogus and fraudulent fundraising using the name of the charity. This is very common and very difficult to stop. And the charity needs to be really quite alert to the fact that people may be using their name in vain and the money is never coming their way. And they may need to take steps to stop people claiming that they're acting on their behalf. Then we get examples of internal fraud. Income fraud, altering the records to hide the theft of charity income or donations. That's obvious risk for most charities. And the trouble about income fraud is it's the hardest to detect. If you've lost money to procurement or something like that, you know what you spent because you've got the record of what you spent. But if you didn't get income you weren't expecting to get, you don't know you didn't get it. Payment fraud, false suppliers, diverting payments. These are, it's amazing how often charities take on somebody who's been sacked from the private sector or the public sector because they were committing fraud in a financial area, and the charity immediately gives them a job in the financial area without even thinking of the consequences. Payroll-related fraud. There's something we call ghosts and echoes. Ghosts is where a false person gets onto the payroll altogether and is paid and it's just the money's stolen. Echo is when a genuine person leaves, but somebody keeps them on but diverts it to their bank account. And then false allowances or overtime claims, very, very common. False expense claims. What I would say is you get a significant internal fraud or it's by a senior member of the organization. It has more of an impact on the organization than sometimes quite higher value external fraud. So though external fraud tends to be financially the largest, an internal fraud can totally disrupt the organization, particularly if it involves somebody senior or trusted who's been there for a number of years. So prevention through strong controls, up-to-date risk assessments and awareness training is always going to be better than detection, investigation and prosecution through the courts. I can tell you that now. With certain exceptions, the police aren't going to help a large organization. If you're a large organization, whether you're in the voluntary sector or not, the police's view will be that you're big enough to deal with any fraud issues yourself and have your own counter-fraud, anti-fraud measures in place. If you're a smaller organization or the little old lady on the street corner, they'll help you. And Police Foundation, for instance, in 2019 showed that only 3% of reported fraud led to a criminal investigation. And of that 3%, less than 10% led to a result. So if you think about that, statistically, dealing with fraud as a criminal matter and trying to pursue it through the police is doomed to failure. So it's worth bearing in mind. And triggering a criminal investigation is a disbenefit to the public service and could be a disbenefit to the voluntary sector as well. It's an extremely costly route to go down, and you don't necessarily get anything back. Civil actions are a much better way, carry a lower burden of proof, and it's a good way to get money back off somebody who's run off of money if they've still got it and not spent it on their gambling or their drug taking or whatever their other habit was. So types of fraud and emerging trends. Experian did a survey a couple of years ago during the course of the pandemic, or just before the pandemic. And what they came up with was that what we can see is that since the pandemic, if we look at the ONS statistics, I'm sure you'll know there's a section in the ONS that looks at fraud. And there's a section that publishes a quarterly update, and it also does an annual update. And it's usually a very insightful report because they always give you a little summary explaining what's going on and what the big risks are. But cyber-enabled fraud increased during the pandemic, as you would expect. But the level of fraud generally remained constant. All other crime, by the way, during the pandemic dropped off, except fraud. It was the only one that remained constant. The fastest growing fraud offences are authorised push payment. Now, this is the one where somebody contacts you and says, there's been a fraud on your bank account, you need to move your money to somewhere else, and persuades you to set up an arrangement. So you authorize the transaction and therefore become the victim of the fraud, and the bank says it's your fault because you were stupid enough to move the money. So that's a very common fraud that attacks individuals. Account takeover. This can affect charities. Account takeover is where they have sufficient information to act as if they've got the right of access to your account, and they take it over and then transfer the money somewhere else without you knowing anything about it until you go to use that account and find there's no money there. They can also use that as a means of attacking an organization as if they are another organization. In fact, they've taken over the account of that organization, and they are then taking the funds from that you're paying that organization and diverting it elsewhere. One or two public or sector organizations have been hit by that kind of one in recent years. Account opening, where they open a completely bogus account and then use it to run an apparently legitimate business. I mean, the famous case is the loans that were given out by the British Business Bank during the pandemic. There's more than one street where every single house in the street is apparently a new business, but it isn't. The fraudsters have just taken the details of that person and used them to create a completely bogus account for getting a loan. And they can do the same when approaching charities to get money off charities. And then there's transaction payment fraud, where it's diverted. So you've got an arrangement with a supplier that supplies you with, I don't know, some medical gear the charity needs, and you pay them every month. And then you get an email from them saying to the finance director, you know, no, look, we've just changed our banking account. We're now at a new one. You now need to use this and it's on the proper letterheaded something and everything else. So you change the details, send it off to the new one. And of course, it turns out to be completely bogus. And then the organization rings you up and says, why haven't you paid us this month? You go, well, we have. But that is best way to do that is that you have mechanisms in place, stiff measures, that if somebody does try to change where they're now paid, you have a second route of getting hold of that organization to check it's genuine. I mean, that's happened inside organizations. We've had finance directors telling staff to move something when it's just their email account has been hacked. And that can happen to charities as well. And then a growing kind of fraud. First time I heard about it, I thought it was a bit of a joke, but it's genuine. Synthetic identity. We see it in a romance fraud in particular. A synthetic identity is when they take genuine identities on the internet and in social media and put them together to create a false, different identity, but using the details from the genuine identity. That's synthetic identity. And then, of course, they persuade the people on the receiving end that they need cash or funds for whatever it is, which they then steal. And you think that you're doing it to somebody who genuinely fits the needs of the charity for being that person. So as I say, these, although the first one affects individuals, the others can all affect an actual organization. So I'm also just, at this point, I thought I'd just throw in a case from my experience. This was a charity, and this charity had two branches. It ran a school where it would give bursaries to children who would otherwise have not got the kind of level of education it was giving. It was linked to a religious institution. I won't name the institution, but it would give training and you know, children from poor East End background would then be taken to this school, which is a very nice part of the West Country, and they would then go through this private school education at the benefit of the trustees and the charity. And it also ran a seminary for priests in London. So there were two separate businesses, but run by the same charity. And they had a bursar. The bursar was based at the school, but ran the finances for both organizations. But he decided he thought the school headmaster was a weak man, and the bursar thought he should be in charge of everything at the school, not the headmaster. So first of all, he persuaded the trustees that they ought to fund him to have a vehicle. So they said, well, no, we'll just fund you mileage for whatever you do and use your own vehicle. So he told the staff at the school, the trustees had agreed to fund him for a vehicle. They knew nothing the wiser. So he put through and approved himself through the school's books, buying himself a new vehicle. That worked quite successfully. Nobody noticed for 3 years. So 3 years later, he bought himself an even newer vehicle. And did exactly the same thing and said the trustees have approved it. And of course, the trustees knew nothing about this. And all was going along swimmingly until even the trustees realized that their headmaster was weak, and they appointed a new headmaster. And the new headmaster decided, not unreasonably, like the bursar, to explain how the school finances worked to him so he could work out where he could spend money and where he couldn't. And the bursar said, you don't need to trouble yourself with that. I deal with all of that. And the headmaster said, well, no, actually, I do want to trouble myself with that. So would you mind giving me some records? At which point the bursar went sick, was unable, because he said the stress of the headmaster talking to him had affected him. So this dragged on for about 4 or 5 months. And in the middle of it, one of the bursar's finance staff had a request from a charity that wanted a payment that came out of one of the trust books, where there was a separate checkbook. So she thought, well, I better deal with that as the bursar's still off sick. So she went and got the checkbook and noticed it had several transactions in it she couldn't find in the records, including, of course, the purchase of his cars. So she thought, oh, that's odd. So when he eventually came back in, she said to him, I was looking at your checkbook, and he went absolutely ballistic at her, shouted at and screamed at her and told her she had no right to look at those records and took it all back off her immediately. So at this point, even her suspicions were aroused, and she went past him and spoke to the headmaster. The headmaster suspended him, and they called in a team who passed the job on to me. And I went in there and had a look, and sure enough, from the moment he'd first decided he was having a car, he'd started altering records to move things about, and he'd hidden it all because he was the one everything came back to. So nobody challenged him. The trustees were totally unaware of what he was doing. And when you analyze the checks in that checkbook, nearly all of them have been used to pay off things that related to him. And he'd even found a beautiful scam to pay off his credit card expenses. There was a problem with the VAT at the seminary. So he got the seminary finance person to send him details of how much money needed to be transferred, which came at £5,000. He then showed the transaction in the books as £5,000, but in actual fact went to the bank and paid off his credit card for £5,000. It was only when we went and got the check back from the bank that we could see what he'd actually done. So I say he was caught by an alert member of his own staff challenging what he was doing. And it turned out for over a 6-year period, he'd been just helping himself. He got 2 years, by the way, at Oxford Crown Court. But all because he was allowed to do whatever he said, and nobody challenged him until a stronger headmaster came along and said, well, what on earth are you actually doing? So let's talk about what might trigger thinking about fraud if you're a trustee or involved with a charity and you see things that might be affecting it. Well, I love George Polyer. He's my favorite academic. And he was author of the best-selling book, How to Solve It. He came out with that wonderful quote, believe nothing, but question only that which is worth questioning. That's been my motto throughout my life. If you ever get a chance, there's some wonderful old YouTube videos of Polyer in action with a group of Harvard students. They're all sitting there neatly dressed and lined up in rows as they were in those days. And he asks them a simple mathematical question, and then he deconstructs it over the next half hour. And they all think they're right as they go along until they realize how much more there is to the things. And he's making the point to them, what I was showing you was the difference between induction and deduction at the end of the story. But anyway, so there are signs that you can say that would point to a corrupt business relationship, and the sort of signs you would look for. If somebody's accepting or receiving gifts or offering lavish entertainment to somebody at the top of the organization, golfing days are a good one. Wining and dining at fine restaurants is a good sign. These are the kinds of things that slip past people, and it's the way somebody corrupt is getting on the inside. And then you get rumors about people who deal with your procurement or purchasing. You know, well, he's got a flash car, he's always out, we never see him, he's out to lunch permanently. Those, you know, or somebody says, oh, so-and-so, I saw them down outside that casino. That's about the 4th time I've seen them there, and they're always going round to the bookies. If they're going around to the bookies and they do handle your money, I'd be very worried. And then you get somebody who always wins the contracts for your charity. Why do they always win? We'll ignore that one. And then you get, you put out in your tendering that you want some particular thing. They say, well, no, we're actually going to do something else. And nobody realizes they're not doing what you said. And then you get tailor-made specifications to suit a particular provider. I couldn't possibly name him, but a certain commissioner of police wanted his skiing partner to have an IT contract. So he got the skiing partner to write the specification, put the specification out, and then got the IT people to award the contract to the skiing partner. Remarkable. But he didn't think he'd done anything corrupt, allegedly. Then you get signs that point to fraudulent suppliers. An obvious one that people often don't check is if you look at Companies House, it has information about any registered company. But you'll find that information doesn't match the information given to you about that company. And if that's the case, then that's a big red flag. You'll get an offshore tax haven or an obscure, untraceable parent company of an organization. There'll be in some kind of loops and loops and loops. I'm always deeply suspicious of any company that organizes itself that way. The The other thing is companies have registration numbers. The company house relies on the registration number. There must be, for instance, there are 50 companies called Viking products. Well, which Viking product are you dealing with? The only way to know is by the registration number. Now, I've seen, and it happened to the Met, I've seen when I worked in the Met Police, we had a contractor come in, win a contract, and then in come the invoices, same letter heading, same everything, registration number, totally different, completely different company. And then, of course, they're not bound by all the agreements they've signed up with you if anything goes wrong. And then you get the internet address doesn't match what's going on. As I pointed out to a well-known government organization quite recently, you do realize that your IP address is actually based in Marseille in an area known to criminals, and they had no idea. And then if the organization has a history of county court judgments, that's what a CCJ is, or litigation, or if you look at their accounts and there's cumulative unpaid VAT or other taxes, corporation tax going up every year in their accounts, that tells you they're not paying their bills and they're cheats. It's as simple as that. And then you get the unexpected change of key details. I mentioned that is a very common thing nowadays that needs being watched out for, and you need protections in the organization against that being acted on too soon. And then there are signs that point to fraudulent behavior by individuals. Lying on their CV. A lot of people seem to think it's fair game to lie about experience and qualifications. If you're prepared to lie about your qualifications, what else are you prepared to lie and cheat about? Because you've already broken that moral taboo in applying for the job. You get somebody with a regular pattern of overtime or sickness, it's either unauthorized or they're faking it. Or as I had, somebody had disappeared for 2 hours every Wednesday lunchtime. There's a very good reason for that. As well as their job at the organization, every Wednesday lunchtime, they went and queued up and signed on and got their cash at the local labour exchange. Then you get somebody who's a very aggressive or manager, like the bursar I mentioned, who anybody got anywhere near him, he jumped down their throat. That's an almost certain sign of somebody who's got something to hide. And you get somebody who abuses their position, using their relationship with somebody. The laundry manager who knows the finance clerk to make sure that the laundry bonus is always at the top because they fiddle the figures on the laundry returns coming in. One I remember from my NHS days. Then you get domestic circumstances. If somebody's had a messy divorce or they've got a number of children to support all at university, or they're under pressure because of a drug habit, or they're under pressure because of an alcohol habit, then they're the kind of people who are going to steal from you. However honest they might have been in other ways. Now, if you've got a devolved procurement system, this is quite common in charities. And the charity I was advising last year had very much a devolved procurement system. That does create lots of other risks. I mean, for instance, you can unintentionally break tax rules or procurement regulations simply because the local procurement doesn't realise that they're covered by regulations that the UK government is still bound by, even though we left the EU. They may fail to understand the risk of fraud locally and get involved with bribery or corruption without realising they have. And they can be tempted, therefore, by a cosy relationship with suppliers. And they may accept excessive hospitality or bribes, not realising what they've done. They're thinking, oh, yeah, that's all right, it's very nice of them to take me out to dinner, not realise the next thing they know, they will say, well, you better sign that off, or I'll tell your bosses that I took you out to dinner. Now, thinking just a little like a fraudster, you don't want to think too much like a fraudster, or you'll end up like me, and you could be one, or you could detect them, whichever you felt like doing. I mean, the best detectives are always the ones that are closest to being the criminals. Fraud awareness training is particularly effective, and of course, we've got Fraud Awareness Week going on right now. But you really need a cross-section of staff involved there, because that then alerts people to things they haven't thought about. Ask staff how they think their own systems could be exploited, because often the staff on the ground are the ones that really know, not the management. And I always used to say this, for any organisation activity, there are three things. There's the prescribed system, what the rules say they should be doing, what the regulations say, what the organisation says it does. There's the alleged system, which is what the line manager tells you is going on. Now, this is how we do this. That's what's told to any investigator or auditor who comes along. And then, of course, there's the actual system, what the staff actually do, because if they didn't do that, the system would never work and nothing would actually happen. But for people like me, unless you find out the actual system, you never really know what's going on. And the trouble with trustees is most of the time, they will never know what the actual system is in the charity. They will only ever see the high level view of it. So a lot depends on the right ethos and organizational culture. As well as having the tone of being great people, doing wonderful things and good deeds, they also need to have a culture of being anti-fraud. And that cascades from the top. If the top of the organization cares about the risk of fraud, so will the organization's middle management. If the top of the organization thinks it's a distraction, then the middle management will think it's a distraction too. And that's the risk that you have. And the right actions by those in position of responsibility will influence behavior of the others. It really will. Charity Commission provide an awful lot of guidance on this. They really do. And it was all through var.gov.uk. Absolutely comprehensive guidance for charities. I mean, it couldn't be more comprehensive. They provide guidance on strong internal controls under something called CC8. They provide best practice advice through the Finance Group Countering Fraud Manual. If you've got sleepless nights, I suggest you read it. By the end of it, you will be asleep. And they have a draft anti-fraud and corruption policy, which is actually pretty good. I wouldn't argue with it, to be honest. And they have links to the Fraud Advisory Panel, who are an independent, not-for-profit body. But that's why the Charity Commission has so much counter-fraud guidance, because of their links with the Fraud Advisory Panel. And it's actually good stuff. You know, I couldn't argue with them. It's good stuff. But if this is a cartoon from one of my books, so apologies for the quality of it. So CID office, you want us to investigate a fraud? I'm sorry, we have nobody available. Because if you turn up at the local police station and say, we've got a fraud and here are all the papers, we're not sure where it is, can you look into it? That's the last thing the police want to do. Because they have enough paperwork of their own, and they don't want passport documentation from another organization whose systems they don't know and they're not familiar with, and who they know don't know the law about fraud, and then trying to find their fraud. However, if you've got the expertise and you turn up after doing your own internal investigation with all the links, all the proofs, who should be nicked for it, then the police might take an interest. But the only time I would use the criminal route is when the person who's stolen the money can't be got at by other means. In other words, if you can't sack them, if you can't take them away from doing your contracts, if you can't get your money back off them through the civil courts, that's when the criminal route applies and not otherwise. So at that point, I think I'll turn to any questions. And of course, if you're stuck, there's always my books. I get a small royalty if anybody buys them. So that's me. I think I'll stop sharing the screen at that point, Malcolm, and hand back to the management.
Okay, thank you, Peter. We have a question from with fraudulent behaviour, red flags. Is it really true that bullying and aggression are highly likely to relate to fraud as opposed to other personal deficiencies?
Well, in my experience, if they're a senior manager and they're committing fraud, they will bully the people around them into allowing them to continue to commit the fraud. It might not be the case with people who are under stress for other reasons. And of course, you need to know. I mean, one of the big things in the fraud world is and particularly for academics, they try to understand the motivation of fraudsters. And part of it is whether they're under pressure, because people who are under pressure will behave irrationally for reasons that are not connected with fraud. That's quite true. So how you draw the distinction between an irrational, irascible, bad behaved person who's thinking of killing their wife, as opposed to somebody who's thinking of committing a fraud? Well, the answer is, in my experience, you can't tell the difference. But what you can do is, if you've got red flags, the whole point about fraud red flags in this context is if you've got more than one red flag, that suggests you've got a problem. One red flag on its own is just an isolated thing. In the police, they used to say on fraud, if you have 5 examples of fraud, it's deliberate. If you've got one random example, it could be an error, it could be a cock-up. I mean, cock-up theory of life usually rules. But what I would say is this: if you're wearing a fraud hat and you find somebody's aggressive, won't let anybody near their work, won't let them see what they're doing, they're hiding something. So you need to get to the bottom of what it is they're hiding. As you say, it may be personal stress in their personal life. It may be something about their behavior with somebody else in the office. Or it may indeed be because they are a fraudster, or it could simply be they're totally incompetent and have been over promoted. You look for the other red flags to go alongside is a simple answer.
I assume that if you go into an organisation and there has been fraud, there's known or pretty much known to be fraud, then the person who's the bully may be the chief suspect.
Well, I'll
But,
give you.
but if you turn it around the other way, and,
Yeah.
and just an ordinary organisation, and there's someone who's a bit of a bully, it doesn't necessarily mean that they're a fraudster.
No, but what I would say is this: charities are full of ordinary people, like the police. I used to, when I was in the Met Police, I used to run 70 or 80 internal fraud investigations a year. And that was a population of 50,000 staff in the police. And I had a team of ex-detectives doing that work with me. Because if you've got an ordinary cross-section of the population, some of them will be fraudulent. It's just in their nature. And you're bound to recruit them. I see Mr. Randall wishes to say something.
Yeah, if I could just add something there, the bullying or aggressive behaviour may not actually come from a fraudster, but if you have a senior member of staff, particularly a CEO or founder of a charity, who won't listen to other people's ideas, then the chances of your explaining to them their actions give rise to a fraud risk are very much diminished. So the organisation becomes more exposed.
Indeed, you're quite right. And equally, on the other side of the coin, I can quote a case in one of my early days of going to the National Heart Hospital. And I knew there was something wrong with the income, and the cashier was extremely nervous. And the moment he saw me as an auditor coming to see him, he was shaking like a leaf. And indeed, the following day, he went off sick. Now, those are what I would call two clear signs of red flags of a fraud. So we went through the cashier's stuff with a fine tooth comb. And I went and saw the hospital administrator, who was his line manager. And he said, no, the man's just a blank idiot. And, he's a very nervous person. There's nothing wrong here. So I went away, not satisfied, but my boss told me to move on. A few months later, they were doing their annual accounts, and they called back a retired treasurer to help them. And he immediately spotted the fraud. It wasn't the cashier. It was the administrator committing the fraud. And the cashier knew he was, but was terrified of him because he was his line manager. So he'd given me the red flag symptoms. And in fact, I've actually asked him the right question. He had a check from the administrator in the drawer when he paid back an early stage of a fraud before he just started stealing it again. So the signs were there, and I was right to be alert, but I was looking at the wrong person.
I've got a couple of questions that are kind of related. A very specific one, which is, would you think that AI can help identify fraud in accounting, would be reliable? And then a more general question about any other analytical techniques that might do the same thing.
There are
first of all, about AI.
Yeah, we're starting with AI. AI, there is a lot of very sophisticated systems that can pick stuff out nowadays. It can do fuzzy logic. It can pick out things that don't make sense. And in fact, that's exactly what HMRC do to work out a rogue trader. And there's lots of technology out there you can use. The problem is the people who purvey it and the people who run it charge a fortune for it. So you've got to be very careful as a charity. It's a very expensive route to go down. And one of the issues with AI that I always have is you will get a number of false positives. If your systems and data aren't good enough, you will get some very unclean results from AI, and you'll spend a lot of time chasing your own tails before you come out the other end. But what I can tell you about is a very simple technique that anybody who can use a spreadsheet can use. And I've used myself. I mean, I had a case a few years ago when British Transport Police approached a lawyer and me for help. They thought somebody in their finance department might be defrauding them because they had huge holes in their systems, which they just discovered. So what I did was I used a technique called Benford's Law. Now, if you've never heard of Benford's Law, some of you may have done. You have, Malcolm. Right. You'll know that Benford's Law is a law about the first digit in any population of numbers. It assumes the first digit is not naught. It assumes the first digit is 1, 2, 3, 4, 5, 6, 7, 8, or 9. And Benford's worked out. In fact, it all goes back to, as Malcolm knows, one of my hobbies and Paul knows, is I'm an amateur astronomer. There's a chart behind me on the wall to that effect. But Simon Newcomb, who was an academic at Harvard University in the 1870s, was also an amateur astronomer. But one of the things he noticed was that in those days, people had logbooks for doing their calculations, of course, well beyond modern technology. He noticed logbooks always wore out at the front. And he postulated that the reason why they wore out at the front, because obviously if you're looking up a log, you look up the log you're looking at. You don't just start at the beginning and work your way through. So he postulated that it was about the number 1, and that it crops more often. But he never researched it. But Benford, who was both an engineer and at the time a Taylorism and all of that, a statistician, he took an interest in this, and he proved that there is in fact a correlation between the use of the numbers. So on Benford's general standard thing, number 1 crops up as the first number about 30% of the time, and number 9 only crops up about 4.5% of the time. But what you can do with any organization, you can take all your financial transactions and you can model them on Benford's law. So what you can do to them is you can say, well, what is the profile for my organization? Where we should have a peak in 1, unless we charge $9.99 for everything we sell, in which case, obviously, you're going to have a different peak. But apart from shoe shops, almost every organization will follow a kind of Benford law profile, and you can work out the one for your organization. Once you know it, you can do 2 things. You can look at individual people who've authorized transactions, and you can see what their Benford's law profile is, and does it match the rest of the organization. That's what I did, basically. What I did with the British Transport Police, they gave me literally a dump onto my laptop of past 5 years of all their supplier data. Now, literally, I then analyzed it by supplier and by staff authorizing. So I had 2 Benford's law profiles. I had, is an individual member of staff, authorizing invoices at a funny time of night? Are there also invoices that have an odd profile? And then I did another one which looked at whether any supplier had an odd profile, where they were nearer the 9s than the 1s. And in fact, at the Met Police, we had a big fraud that we did stop this way. And it was when the Works Department came to me and said, Peter, we've got a problem. We spend about 60 million a year on works and maintenance, of which about 2 million a year is supposed to be minor works and maintenance. But our minor works and maintenance budget is going through the roof, and we can't work out why. A very quick Benford's law analysis told us 2 things. It told us that there was a weakness in the system because the Met had decided anything under £1,000 wasn't checked. So what was happening? Suppliers that knew this, invoices for 970, 980, but never 1,000. And we found 2 suppliers whose Benford's law profile were the reverse way round to everybody else. So we just told them to stop paying them altogether. They stopped them, neither complained, and the budget went back on course within 2 months. One of the suppliers was a husband and wife on the 7th floor of a block of flats who managed to get a police contract without the police noticing, and they got hundreds of thousands of pounds. That were £500,000 they got in the end. And the other one was a supplier who was just, every job he did, he was resubmitting it and just changing the details and submitting it every month, because he knew as long as he kept it under £1,000, nobody was cross-checking it. And of course, we also had the idiot who would only check transactions by going out to a police unit and saying, show me a transaction that's been done. So he'd see that a new cell lock had been fitted, or he'd see that some new bit of maintenance had been done. He'd go back and he'd check that off as part of his sample of checks that it had been done, missing the point that, of course, all he's seeing is the ones that have been done. What about the ones that have been paid for that hadn't been done? So it's a question of having your eyes open to how to think like a fraudster and seeing it that way around. But as I say, Benford's law is a simple technique. You can model it on your spreadsheets. You can take the data from any organization you deal with, and you can see if anything doesn't mean it's a fraud, but it's a red flag to tell you there's something needs to be looked at. Sorry, I'm rabbiting on as I usually do.
Are there any more questions from anyone? Let me know through any mechanism, but in the chat, the hand raise, either the metaphorical or actual. I think we've done on questions. So thank you to Peter and Paul for presenting, and thank you for everyone for turning up. Oh, no, that's another thank you. So I think we're finished.
Right.
Thank you to everybody.
Thank you. That was really, really interesting. Thanks.
Thank you, Ruth. Yes, I remember my Treasury days fondly, but I've had a lot more fun since I left the Treasury.
And thanks, Paul and Malcolm, for putting it on. Bye.
Hi, Ruth.